Hello, trading is closed on February 10th, 2022. We always start with our disclaimer. It's my trading plan for tomorrow, Friday the 11th. Remember, I can be completely wrong, and any trade you make should be at your own risk. Look for the pattern with the early high, which is this. Tomorrow I'm expecting to see a pattern with an early high. We said if we didn't clear this high promptly, we were likely to see a straight line drop, and that's what we got. The system has generated a new target, 45.53.19. If we gap down smartly, that's off the table as far as time goes, but not as far as price. It's entirely possible. Futures are down as I'm recording this. And when this pattern is weak, it should lead to more weakness. So there's a number of reasons to think this won't print. But if we don't gap down smartly, that's what the system calls for. Should probably say there's an increased risk it won't work, because there really is, but especially because the weakness in this pattern usually leads to more weakness. But I'm going to use this unless we gap down smartly. Gap down smartly, the call's killed before the open. MEJT in the afternoon says this won't stick, says we'll overtake this line. Early on, we got an optional higher target from the morning pattern that clearly printed. We also came within pennies of an ultimate sell, and that worked. I'm going to give a little explanation here in the book. I had a number of rules. A few people have pointed out that some of the calls I make lately don't exactly follow the rules in the book. Well, all the rules in the book still work. A few years ago, I had a computer program, and the programmer didn't program things exactly as the book said, and those rules worked too. For instance, according to what I wrote in the book, that's a valid ultimate sell signal. When I wrote the program, the computer can't eyeball it. We had to give specific numerical criteria, and that missed within a few pennies of being an ultimate sell signal. So in the book, I would just eyeball it. The computer program wouldn't call it, but no matter which one you used, it still worked. I have to admit, sometimes I forget what rules are in the book and what rules are in the program. Just remember, they all work. Let's go back to today's pattern. As I say, when this is weak, it should lead to more weakness. But we have a higher target, so those are signals that are somewhat mixed. This is the E-mini contract. There's a volume spike. This tends to occur in terms of time close to market lows. So in terms of time, we're close to a low. Doesn't mean you won't spike higher tomorrow. Doesn't mean you can't go lower first, but we should start looking for a low. This was a pretty good rally earlier in the week. Here's the pullback. Here's the close. This close couldn't close under any of the lows of the prior pattern. So right now, as of the close, we're just backing and filling this move up. Now that could all change tomorrow. We could gap under all these lows and just keep on dropping. But as of now, we have a big drop, which hasn't really closed under a level of significance. If you look at the longer term chart, this is a daily chart, you can see we're still in the consolidation. We're still over the 200-day moving average. And although nothing stops us from dropping tomorrow, if we continued up, in the scheme of things, it wouldn't change much. There's no break of a level of significance yet. This is how we're calling the longer term count, and I think we're in wave black C down, and I think we have much lower to go. But let's look at what's happened since we started wave black C. Well, that's an impulse down. C to count an ABC up for B, but then how are you supposed to count this wave? It's pretty tough right now to count it as part of a 5-wave structure. It counts easily as an ABC, but if that's an ABC, C is a clear 5 waves. So if we're going to keep dropping, how does one count this? I mean, it could be the end of an ABC for A of larger degree. That counts easily. But if we do keep dropping, you have to find some other way to count this with a 5-wave structure in the middle. And I'm certain there's a way, but it just doesn't appear clear to me at this time. Friday's pattern has the early high. We could still gap down. There is a higher target. Unless we gap down smartly, it's favored to print. Futures are lower as I record this, so such a gap down is quite possible. Today's sharp decline failed to undercut relative lows from the prior consolidation. Could change, but as of now, the decline just represents backing and filling of the rally from earlier in the week. There is a wave count which justifies a rally, and the E-mini volume spike suggests we're near a bottom in terms of time. Last week there was a huge monetary increase in the funds and Riley's bear funds. It's all gone. Whether it was just a spurious print or everybody who put money in the bear funds took it out, I don't know. But there was a huge spike. We had the rally and that spike is gone. So all this bearishness that was there has gone away, which is positive. So tomorrow should have the early high. This is a pattern which is normally weak, but there's a higher target. And if we don't gap smartly down, I'm going to have to make that my call. I'm pretty leery of higher calls in this environment, but I'm going to go with it if we don't gap down smartly. And that's today's call.